Welcome back to Vantage. This is the last one in this season. We'll be back in September, but this one really looks at the idea of thematic investing. Thematic investing is a fascinating way of picking out winners and losers. I was recently at a conference where someone articulated the idea of why are we trying to decarbonize our cities. We want our children to breathe better air. We want ourselves to breathe better air so that our health and well-being is better. How do you do that? You remove all those petrol cars and substitute them for bikes. You substitute them for electric scooters, and guess what? MIPIM is one of the best producers of helmets, and it's a company that's doing really well. My next guest is an exponent of this thematic investing trend. He writes a regular thematic blog. It's really worth you taking a look at. Let's go take a look. Welcome back to Vantage. There's a lot of people who like to invest on a thematic basis, and I am delighted to get someone who puts out some great thematic content. I'm a regular reader of it. Welcome back to the show, Alex Guntz.
Thanks so much, Neil.
Do you want to briefly introduce yourself and the journey that's taken you to managing money?
100%. It's obviously an absolute pleasure to be here again, and for everyone's benefit, just to recap, I've been in finance for just over 25 years now. I started my career in '97. I was writing research at the time on the sell side on TMT businesses, which is incredibly instructive now when thinking about the world thematically. I did a decade with bulge bracket firms, and then, similar to many other people in the industry, wanted to pursue something a little more entrepreneurial, make the move onto the buy side. I joined Heptagon Capital in 2011, and 5 years later, 2016, we launched in a UCITS format the Heptagon Future Trends Equity Fund.
Tell us a little bit more about the fund, its objectives, what you're hoping to aspire to do with it.
When I started at Heptagon, the founders basically said to me, look, you have a blank sheet of paper. We want you to create something that is very simple, but very differentiated. As a firm, we're big believers in active management on the equity side. And I think if you were to ask me to describe what we do in this strategy in one sentence, it's very simple. We're quite unique in offering genuine pan-thematic exposure. We invest in everything from fish to chips and cloud to wind, but also in a very concentrated portfolio. So we've never had more than 25 names in the fund. Our active share has always been in the high 90s. Our tracking error has always been around 8%. And we think that you are getting in the Future Trends Fund something which is very different to the MSCI World or indeed other global growth funds.
Well, the Future Trends Fund, it's a great name. I think it also sort of makes me think about, look, these are emerging things. So I'd love to understand how you get insight into emerging trends, the unknown of what the world is going to look like. And given the great noise that AI has made over the last 12 months, maybe use that as an example of how you've developed insights.
Yeah, I mean, thank you. It's a wonderful question, and it's something we obviously devote a lot of our time to. And I think perhaps the best way of summarizing it is that really in our work we try and combine a very detailed top-down understanding of the themes and then marry that with bottom-up stock analysis. And what I regularly say in all conversations on this topic is, look, it's easy in inverted commas to identify themes, much harder to identify businesses, and even harder to identify businesses that actually meet our very strict criteria. So the best way to think about it is really we begin at the beginning, we identify a theme, we do a lot of digging around the theme, reading on the topic, talking to people in our network, potentially going to trade fairs or industry conferences. We distill those thoughts into a thematic white paper. These are all available on our website. We then identify a handful of companies that we think are poised to benefit, and then we run them through our screens. Sounds very simple. In reality, it's quite complex. And just to give you a quick insight into AI, because I think it is relevant, we first started thinking and talking about this theme back in 2016. There was almost an AI winter, if you will, at that time. Clearly, ChatGPT came along at the end of last year. It's proved very revolutionary. It's dominating pretty much every conversation we have with investors at the moment. Our natural response was to do some further work on the topic, to produce another insight paper onto AI at the beginning of this year. And in terms of how we implement it practically within our strategy, I think we're always trying to look around corners, if you will, not necessarily go for the most obvious businesses, because again, our whole strategy is really premised on active share, doing something quite different, looking for second derivatives wherever possible, and again, sticking to our discipline. We want industry leaders, we want pure play companies, we want companies with a track record of out-innovation.
So let's explore some of the themes that you have been investing in, and I'd love to hear the high level sort of pitch as to this is why it's going to, this particular theme is going to be transforming the world, or why it's going to be, commercially, an interesting area, and then how you're expressing that in terms of one of your holdings.
Sure. I'll give you two examples, Neil, and I think the first one, it's a wonderful segue from the prior question about AI. So our most recent investment in the Future Trends Fund was a business called GXO Logistics, and this is by no means a household name, listed in the US, capitalized at about $7.5 billion, and it's only been a public company since July 21, which is partly what made it interesting to us. And really the starting point for this is the bigger picture thematic about online society. If we are going increasingly online, you need more warehouse space. You need that warehouse space to be incredibly well designed and kitted out with logistics. The clue's in the name in terms of what GXO does. And basically they're the number one player in contract logistics in the world. If you get a pair of trainers and it comes in the wrong size, it's problematic to send it back, you will ultimately blame the trainer manufacturer, although the fault really lies in logistics. And the dynamic which is therefore occurring in the industry is that every single manufacturing company is moving to outsourcing. GXO is the number one player in this field. And when you think about something like AI, it's a very overused term, as I think probably everyone knows. It's often misused as well. But a lot of it is about designing programs, coming up with solutions which allow you to optimize outcomes. And effectively, if you can route your robots around a warehouse more efficiently, you can order where the goods come in, go out more efficiently using better algorithms. This is a really great example in the real world of how AI works. So GXO is one really good example. So changing tack, Neil, and giving you a second example of a business we recently invested in, I'd like to talk a little bit about Xylem. It's another great company and a name that perhaps not many people have heard of. It's listed in the US, capitalized at about $20 billion, and it's a leading player within the space of water technology. If you take a step back, one observation we often make when we talk about future trends is that our whole purpose is really to resolve this dynamic. How do you allocate scarce resource efficiently in the face of a growing population? Now, when you think about water, it's 1% of GDP, roughly, globally, but the other 99% depend on it. We need water to survive. Really hard to control demand, so you have to think about the supply side. And basically what Xylem does is they have the best set of tools, in our opinion, that combine hardware and software together, which really allow you to do effective fault analysis, fault monitoring, maintenance, and really improving the efficiency of water networks.
Those are two really fascinating sort of themes, and I think I on my wish list is to go and see one of the GXO logistics warehouses, because I think they're awe-inspiring from people I've talked to. While you go about sort of investing thematically, I wonder how that sits with your view in terms of how markets themselves are going to perform in the second half, and whether that tilts your behaviour in any way. So love to hear your views in terms of what you've seen in terms of equity market performance in particular for the first half of this year, what story that's telling you, and I guess what you are anticipating for the second half of the year.
Sure. I mean, I think when we look at the world thematically as a high-level observation, we always say the themes we invest in, we believe, should grow in importance broadly regardless of what's happening to GDP, and governments and regulators, if they're present, are tailwinds for those spaces rather than headwinds. But then when we think about the broader equity market, obviously what we're doing doesn't occur in isolation. And I think really when you look at the world of equities, it's been quite remarkable what's happened in the first half of this year. Take whatever narrative you want, the reality is equities globally are at or very close to 12-month highs. when we try and think about this and explain it, I think the best possible explanation is simply that the economy has been less bad than feared, correspondingly earnings have been less bad than feared. And that's been really reflected in what's gone on. So the MSCI World's gone up 14% this year, the S&P's gone up 16%, and NASDAQ's gone up 36%. That's great. But when you actually look in a bit more detail, it's a very distorted market. One statistic that I've been sharing with a few people recently is that only 3 companies, Tesla, Nvidia, Apple, the 3 of them together, Nvidia most importantly, have driven about 40% of the market's return. So you've got a very distorted market. AI has almost been the icing on the cake. And I think what that really says to us is, look, there are pockets where the rally has got a little bit overextended. We think it's important to sort of take a step back, to think very judiciously. From our perspective, we keep our discipline, we continue to focus on the longer term. And I think really in terms of where equities more broadly go from here, whilst we do have some reservations, for as long as the economy remains okay, for as long as corporate earnings remain okay, equities probably can continue to make further advances, even if we are perhaps due a pause.
Okay. And you know, we get a lot of people on this show and always love to understand the personality. One of the unique things about you, Alex, is that you run your own food blog. Maybe talk to us a little bit about, you know, why you run, what started you off effectively writing that food blog, and give us a place that we should go and dine.
I think it's very flattering you mentioned that, but I think the sort of commonality in terms of a lot of what I do is that one of my degrees at university was in English literature. I've always very much enjoyed writing, and it's something which has come quite naturally to me. That's partly why we write the thematic papers for the Future Trends Fund, and that's partly why I started reviewing restaurants about a decade ago. It's obviously very fortuitous that in the nature of our work, but also socially, there are a lot of opportunities to eat out. I think generally when asked this question about restaurant recommendations, it's a little bit like picking stocks. Rather than giving you the obvious, it's much more exciting to say, here's something new, here's something undervalued, up and coming, underappreciated. If I were to suggest somewhere close to where Edison has its offices, there's a superb Japanese restaurant I visited recently called Abeno, very near the British Museum. Closer to where Heptagon has its offices in Mayfair, I think Saltie Girl, which is an amazing seafood restaurant that came first of all from Boston, is another top pick. And the final recommendation, if it were a special occasion, my perennial favourite remains a restaurant called Core in Notting Hill.
Alex, it's been a huge pleasure having you back on. I've loved, you know, how you sort of expounded on the themes, what are sort of driving the changes and why you think they're important, and then of course understanding the discipline of actually how you allocate capital in a sensible way to pick winners in that space. Thanks very much. We'll be watching the fund, and I continue to read the thematic content that you put out.
Great, it's always a pleasure being here, Neil. Thanks so much for hosting me.
Thanks very much for everyone for joining Vantage. I believe that this is the last interview in this season's Vantage series. I think we'll be back in September. If you want any future managers to come onto the show, please do let me know. You can contact me on the usual email. Thanks very much for joining us.